XRP's recent price action demands a calm, clear look, because what's happening right now isn't just about Ripple or retail traders. It's a mix of macro fear, ETF dynamics, whale activity, and real product announcements that could change the picture over the next few months. Today, we'll break down the latest developments, why XRP still looks interesting despite short-term weakness, and what to watch as Bitcoin trades around the $87,000 range. The average crypto RSI sits near 44, and the market-wide fear and greed index is deep in extreme fear. Hey guys, you are watching Crypto Blogspot. I make unbiased crypto videos with no sponsor influence, so if transparency matters to you, make sure to like the video and subscribe. And remember, this is not a financial advice, just information and analysis. Now back to XRP. First, the immediate price action. XRP slumped after testing the $2.3 band and then failed to hold it. That rejection triggered aggressive profit taking and forced a wave of liquidations, with roughly $28 million in short-term liquidations recorded and long positions bearing the brunt of that. The token moved from 2.3 into the current battleground near 2.06, and intraday volume spiked, a clear sign that institutions were actively trading around those levels. Basically, we saw a huge burst of activity at the 2.3 ceiling, and sellers defended that zone hard. If you're watching levels, 2.2 remains the structural pivot, even though price is now trading below it. Reclaiming it would set the stage for another attempt to the 2.3 or 2.4 area. A break below 2.02, however, would likely open a quick route toward the 1.98 region. Volume confirmation is the deciding factor. Rising buy volume around 2.06 and 2.2 signals accumulation, while low volume bounces remain fragile. Now let's talk context, because headline numbers alone don't tell the whole story. Over the last 12 months, XRP has outperformed a lot of major tokens. It's up roughly 89% year over year, which is remarkable when Bitcoin and ETF are flat or negative over the same period. That outperformance didn't come from thin air. It's been fueled by the removal of major regulatory risk, the SEC settlement outcomes, product launches like the RLUSD and an XRP Ledger EVM sidechain, and notable institutional moves into the space. Swell 2025 added more fuel to the narrative. Ripple announced a $500 million funding round at a $40 billion valuation. It expanded RLUSD partnerships and teased a lending platform and institutional payment corridor. Those are not small milestones. They reflect real investor interest, especially with traditional finance names now involved. But Swell also reminded us of a recurring pattern. Excitement around the event, a quick spike in price, and then a reversion. Historically, XRP has often finished lower after Swell in 4 of the past 5 years, and traders remember this buy the rumor and sell the news behavior. So while announcements are important, they must translate into measurable on-chain volumes and institutional transaction flows before price can sustain higher levels. ETF dynamics are another major layer. The Canary Spot XRP ETF debuted with very strong day one volume, and the broader ETF landscape saw record inflows into altcoin products, while Bitcoin and Ethereum ETFs experienced outflows. In plain terms, some of the fresh liquidity has been rotating into altcoin ETFs like XRP and Solana, which helped drive big initial demand. Still, ETF flows can be noisy, and they don't always immediately translate into sustained spot price momentum, and that's exactly what we saw. Big ETF volume following by selling pressure as traders locked profits or repositioned into other assets. On-chain whales are playing a complicated role. Large addresses and institutional wallets have added significant positions in recent weeks, and that is a bullish structural sign because it indicates patient capital building exposure. But accumulation by whales doesn't automatically neutralize selling pressure from smaller holders or traders trying to exit positions. In other words, whales can be absorbing some supply, but if retail and levered traders keep selling into rallies, it dilutes that absorption and keeps the price under pressure. That dynamic helps explain why XRP can rally on headlines and yet still trade lower overall. It's also why short-term technical outlook remains sensitive to market-wide risk sentiment. Speaking of market risk, the macro backdrop is not helping. Bitcoin is sitting near $87,000, which has kept sentiment in the risk-off camp. The average crypto RSI at 44 suggests the market is neutral to slightly weak, and the fear and greed index signals extreme fear. These metrics means buyers are cautious, liquidity is thin, and nearly every altcoin will be more vulnerable to downside until the majors stabilize. So yes, even if XRP has strong fundamentals, macro plan can mute the immediate impact of good news. Another thing to watch is liquidity and derivatives. Open interest dynamics and funding rates matter. When funding flips negative and open interest falls, it shows that leverage is coming out of the market and traders are reducing exposure, which can limit upside velocity when positive news arrives. Conversely, a resurgence in OI with positive funding often precedes explosive moves. For XRP specifically, pay attention to on-chain indicators. Exchange inflows and outflows, large wallet accumulation, and stablecoin flows into XRP ledger corridors. If we start seeing steady outflows from exchanges into custody or ETFs, that is a clear supply squeeze signal. Now let's run through 3 plausible scenarios and what I'd watch for in each. First, the bullish case. The catalysts are sustained ETF inflows, positive quarterly metrics from Ripple showing real payment volumes on Prime and RLUSD adoption, and a stabilizing macro environment where Bitcoin recovers above key levels. If that chain of events happens, we get rising buy volume at support, a successful reclaim and retest of 2.2, and a clean break above 2.4. From there, a fast run to 2.6 and beyond becomes possible, assuming whales keep accumulating and retail fear subsides. Second, the base case, which I think is most likely in the near term. That's sideways trading between roughly 2 and 2.6 while ETF continues to attract capital, but macro volatility remains a headwind. Here, Ripple product rollouts continue to advance, but adoption metrics are still building and the market waits for clear evidence. This results in consolidation as buyers and sellers negotiate the narrative. Third is the bearish case. If macro risk ramps up further, ETF approvals stall or disappoint, or Ripple falls to show measurable payment corridor volumes, XRP could drift lower, retest the 1.8 or $2 range, and possibly trigger algorithmic selling if a deeper death cross scenario completes on the moving averages. Historically, Swell data suggests that is a non-trivial risk. So which indicators would traders and holders watch closely? Number 1, the 2.2 pivot. If XRP can reclaim it and show increased buy-side volume, that's the cleanest bullish intraday signal. Number 2, ETF net flows. Large, consistent inflows into spot XRP ETF would signal durable institutional demand and likely support higher spot prices. Number 3, on-chain stablecoin and wrap Bitcoin flows into XRP ledger. Product adoption matters. If RLUSD and Prime start showing actual transaction volumes that are material, sentiment will shift from speculative to structural. And number 4, macro risk markers. Bitcoin's price, the broader crypto RSI, and the fear and greed index. These are gating factors for any strong rally. And lastly, position sizing and risk management are crucial here. XRP's analyzed volatility is still very high. The token is far from volatile than Bitcoin, and swings from 1.8 to $3 in a matter of weeks are possible. Traders should use sensible stops and consider reducing leverage until market structure clearly improves. For long-term holders, the thesis remains intact. if Ripple continues to execute on payments, stablecoin, and institutional infrastructure. The company has material funding and institutional backing in place. The key question is execution, not announcements. In summary, XRP sits at a crossroads. It has stronger fundamentals than many expect thanks to regulatory clarity, deep funding, and also the real product roadmaps. But yet, in the short term, macro weakness, ETF rotation dynamics, and technical resistance at 2.3 keep the market fragile. If you're a trader, treat 2.2 as the battleground and let volume be your guide. If you're a longer-term investor, monitor ETF flows and on-chain adoption metrics. Those will tell you whether this is a temporary correction or the start of something bigger. That's the update. If you found this useful, like the video and subscribe to the channel for more deep dives. Thanks for watching, and I'll be tracking these levels closely and posting follow-ups as more data comes in. Thank you for watching, and I'll see you in the next video, so stay tuned.